One of the central questions, obviously, is what's tech going to do? Is it going to have the kind of year that it had this past year? It was one of the topics I asked famed value investor John Rogers of Ariel yesterday at CNBC's CFO Council down in D.C. Here's what he told me.
I think the top of growth stocks is coming again. I really, really do. You saw the Journal had a story today. The Russell 3000 is up roughly 34%, and the Russell 3000 value is only up 2%. It's one of the largest gaps in the history of, the recorded history, I guess, of looking at those indexes. So that gives me a lot of confidence that small value is going to be the place to be, and that growth stocks are going to have a very difficult time as we go into next year.
That's a pretty good segue to Brad Gerstner, huh? He's our halftime headliner today, joins us exclusively, the Altimeter Capital founder and CEO. Welcome back. It's good to see you.
I mean, it's great to be here. This is so spicy already. I have a piece of advice for Nelson Peltz.
Go ahead.
Okay, he should call Elon Musk and nominate him to that proxy board of 3 people. We want to spice up and do something bold at Disney. Let's get GFY himself on the board.
The problem is, I think Musk has already told Iger where to go. And he did that last night with Andrew, of course, which I know you're alluding to, but we're not going to play it right now. Nonetheless.
So let's talk about John Rogers.
Yeah, let's talk about that. Let's talk about that. You must have a lot. I mean, I know you have respect for opposing views and investors as seasoned as he.
Yes. No, I have a lot of respect for John Rogers, but on this issue, he's dead wrong. And let me tell you why he's wrong. If you look at the last 10 years, Scott, tech has compounded at about 16%. Non-tech has compounded at about 6%. Now, you might say, why is that? Well, the reason is because tech earnings have compounded in the mid-teens, and non-tech earnings have compounded at about 5%. Although we had a big step up in 2023, it was really just a reversion to the mean from the big step down, the compression we had in 2022, caused by this parabolic increase in rates. We're just back on the trend line in terms of tech's relative growth to non-tech. And so, of course, we don't have the asymmetric setup that we had at the start of 2023. But I think that tech is going to continue to outperform non-tech in 2024. I think the setup is like you guys outlined this morning. We've got to see interest rates continue to roll. That will be dependent upon inflation continuing to roll. And growth, we all know is slowing, but it needs to remain intact. So the consensus view now is kind of this soft to medium landing. But if you really want a differentiated view on tech, we just heard from Amazon, we just heard from Microsoft, we just heard from Snowflake and Salesforce, et cetera. They took the message from 2022, they got fit, and now they're all accelerating into the start of a new super cycle around augmented and artificial intelligence. And so when I look at 2024, I'm happy to take the other side of John's trade. We're going to have our entire portfolio in tech. Of course, we're not all in. We have plenty of shorts in our book as well. I said at the start of 2023, we took a very contrarian position. Everybody was on board the Mike Wilson bandwagon of hard landing. We had $250 billion come out of the equity market, cycle into the bond market. The bond market ends up having a disastrous year. The stock market, if you pick the right stocks, had an epic year. And as we enter 2024, we have a little less fewer dollars at risk because the setup is more evenly balanced. We're going to see plenty of opportunities over the course of the year. But our book is going to continue to be positioned around those tech companies that are beneficiaries of this new secular growth trend we have around augmented intelligence. And we're going to continue to short those industries that are being disrupted by those things. And I think that spread of 16 to 6% that we've seen over the last decade will continue in 2024.